In my video 2 weeks ago, I talked about the likelihood that the stock market was going to go lower. It's been doing that. And I know that many people are concerned that this is just the early stages of a more substantial stock market crash. So this week, I'm going to teach you what to look for, not just give you the answer, but teach you how to figure out if the market is likely to go lower or higher in the near term. I'll do my analysis of the overall markets, and then at the end of the video, I'm going to walk you through a day trade that made a big move this week. The stock was BLMZ, and we'll get to that at the end of the video. All right, let's get right into the presentation. And what we're going to start with is just understanding some basic knowledge about how to predict whether the market is going to go higher or lower. The short-term trend is down right now, but the long-term trend is still up. And so what we have to do is establish where support is, and then whether there are falling tops or rising bottoms and how that relates to trend. Now, this is always easier if I show you on a chart. We also want to understand this concept of overbought and oversold. So let's jump into the chart of the S&P 500 index, and we will draw some lines on here to begin. So first of all, where is the trend line? There's a couple. Let's draw a line across these bottoms. Now the way I do that is I just look for what I call an inflection point, where the price stops going down and starts going up. That is an inflection point, and we just connect the dots to establish where support is. What that tells us is that there is still some downside weakness until we hit that level of support. Then we want to understand where is resistance. It's right here. We can see that we've hit this mark twice, and therefore it's quite likely that the market will pull back to this line, bounce off of it, and then start to move back up towards resistance as it goes through a long-term pattern of compressing volatility underneath the resistance at these highs. Now, that doesn't say that we couldn't get more substantial weakness. You have to remember, September is historically the weakest month of the year for the stock market. So are we going to get much more weakness than that? Well, in order to answer that question, we want to see if this chart, if this upward trend line gets broken from a falling top. So if we were to get a pullback to this support line, which is an upward trend line, bounce off of it, but make a peak that is lower than the previous peak, and then break down through this line, at that point, we are now setting up for a much more substantial pullback. Now, that hasn't happened yet. So at this point, all we really see is likelihood of maybe a little more weakness this week. We have a Fed meeting this week where interest rates will be decided. It's expected that rates will drop by a quarter point. There's a 30% chance, according to the bond market, that there will be a half a point drop. And that's going to have a big impact on what the market does next week. Also, the comments that come from the Fed. Are they saying that, the economy is slowing down quicker than they expected? Are there going to be more rate decreases? All of those things are very important for the market next week. Now, this concept of overbought and oversold is another thing that I want everyone to understand. And here's how it works. As price moves in upward trends, you will see that it moves up, it pulls back, it moves up, it pulls back, it moves up. When you run away from the trend line, so if we were to draw a very long-term trend line from way down here, anytime you are far above the trend line, so in other words, up here, you are overbought and you're more likely to come back to the trend line. If we get far below a trend line, and we could draw, a shorter, if we were in a downward trend, we're not really in a downward trend here, but let's use this one over here. So here's a little downward trend, and when you run away from the downward trend, you are oversold and likely to bounce up. Oversold, likely to bounce up, and then ultimately we broke and resume the upward trend from that point. So what the market is doing right now is in a pattern of compressing volatility. If I draw a line across the bottom and a line across the tops, you can see that those lines are converging toward one another, and that is a sign that investors are essentially coming to agreement about what the market is worth. We get these moves to the upside, moves to the downside, but the intensity of the moves are diminishing over time. And when that happens, you get this compressing volatility. It's like a coiled spring. And eventually you break from that compression and then move in a strong trend. So to recap, I don't yet see signs that we have a significant stock market crash coming, but it's not impossible. The thing that you want to watch for on this daily chart of the S&P is, do we break down from a falling top through that trend line? If we do, then I want everyone to get a lot more defensive. For now, just expect for there to likely be more short-term weakness. Now let's continue our analysis with the short-term chart of the S&P 500. You can see here, this was the horizontal trading range. This is called a rectangle consolidation. It broke down there, and that's what indicated we were likely to move lower through the week. We've been doing that until we break this downward trend line. I would expect more short-term weakness. Now the NASDAQ looks a little bit less healthy, and here's why. Remember on the S&P chart, it had made a double top? Well, on the NASDAQ chart, it's actually made a falling top. And we first broke this upward trend line there. That was a sign of weakness. And then we broke down this past week or 6 days ago from a falling top. And that means tech stocks, which really have been the leader of the market, are much more likely to move lower. And so what I want to emphasize, and this is something I've been talking about for the last couple of months really, make sure you're subscribed to the channel. I do this update every week, so subscribe to this YouTube channel and you'll always get these updates. What we're seeing in the market right now is money flowing out of those large cap tech stocks that have really led the market, and they're moving into the broader market. And that's a healthy thing. We're getting a broadening of the strength. That's another reason why I'm not really convinced that we're on the edge of a major stock market crash, but rather just a little corrective phase in the upward trend. The market's taking money out of those high-flying stocks like NVDA, Apple, Microsoft. We're seeing those charts look kind of ugly right now, but they're moving into more interest rate sensitive stocks like banks, like real estate investment trusts. That's where money is starting to flow, and the broader market in general, which has really lagged the overall market move. All right, let's take a look at the IWM because this is a good indication of broader market strength. You can see that we've had some weakness this week along with the rest of the market, but we are still sitting above this trading range, which the market had been in for a long time. So if we change this to a 3-year weekly chart, what you can see is that we broke out here, we came down, tested support, bounced off of it. I think what we're doing is just building what's called a pennant pattern, where we're just gyrating around in here, not really sure what's going to happen, but likely going to break to the upside from that pennant. And the reason why is because the trend into the pennant was up. And so the momentum was up. It's sort of taking a pause here after some strength and likely to move higher. Notice that the stock scores are in good shape. We always like to see the sentiment stock score above 60. You can learn more about that at my website, stockscores.com. And also, you can pull up the stock scores on any stock that you own. It's all free to use there. Just pop in the symbol in the upper left-hand part of the screen here. All right, let's take a look now at the Canadian market, T.XIU. And here we have had generally an upward trend. We're starting this little pullback along with the rest of the market. Probably could come all the way down to that level without really breaking the market. The Canadian market has outperformed the US markets in the last month or so, but I think that they're going to get dragged down in the short term by the weakness in the US markets as well. All right, let's move along now to some of the commodities. We'll look at gold here, and the trend in gold is generally up, especially in the last little while. It's been pausing for 2 weeks or so. If we look at the 1 month, 60-minute chart, you can see that pause here. We've been building this base. If we start to break down through the bottom of that pattern, then I would worry that we've maybe got some profit taking happening, but more than likely we'll just continue here for a little bit and then hopefully resume the upward momentum. Again, stock scores are decent, 71 on the sentiment stock score. Let's take a look now at oil. Oil has had some weakness this past week. You can see here this weakness right there. If we look at the 3-year weekly chart, this is important because this market had been building a decent pattern of compressing volatility. But this week, it broke through the base of that pattern And that means we're either headed lower or at best sideways in the next little while. So I would be cautious with oil. If we look at the 1 month chart, you can really see the weakness this week. It's a little oversold right now, so we might see it bounce back a little bit early next week, but I would be cautious with oil and energy stocks in general. All right, let's move along to the currencies, GBTC, another chart that's getting weaker as time passes. This week broke this upward trend line, likely headed lower. If we look at the 3-year weekly chart, you see a lot of volatility over here. That's a sign that investors are uncertain. Where is it going to find support? Well, let's go back to that lesson from earlier in the video. Draw a line across these bottoms. We're probably going to fall down into that zone right here, 35 on the GBTC, which of course is an ETF that represents Bitcoin. Notice the Stockscores, 28. That's because momentum is downward. You're fighting against pessimism on GBTC. How about the US dollar? UUP is the symbol, and you can see that the tops are falling. That's a sign of pessimism. Trend is down. Stock scores are negative, 38. We like to see that above 60. Sometimes stocks that are in upward trends will get little pullbacks and the score will drop into the 50 to 60 range. But generally speaking, if you want to consider a stock, try to consider those that have a sentiment stock score greater than 60, because it's a sign that there's upward momentum, that there's general optimism. You're not fighting against a negative sentiment on the stock. All right, last chart we're going to look at is TLT, Tango Lima Tango. This is the bond market chart, and the bond market has been pricing in lower interest rates for a few months now. The general trend is up. This week we made a little break to the upside, getting stuck at some resistance there, but I expect this to continue. Again, a lot of this will depend on what happens with the Fed next week. Are we going to see a quarter point drop, a half point drop? What is Jerome Powell going to say about the future direction of rates? And will there be economic numbers that come out that show a slowing US economy? That's another concern for the market that could drive some pessimism in stocks, but also some optimism in the bond market. So my ratings then, bearish on the short-term time frame for US large caps, but neutral long-term. NASDAQ bearish on both time frames. US small cap stocks, short-term bearish, long-term neutral. Canadian stocks, neutral in the short term, bullish in the long term. Gold bullish on both time frames. You can see there for oil and the US dollar, bearish and neutral. And Bitcoin now bearish on both time frames, and bonds still bullish on both time frames. All right, let's talk about the trade of the week, because even in a market that's moving lower, every day there are stocks that move higher. How do you find them? The key thing that I do is look for stocks that are trading with strong volume, abnormal volume, and are moving up. Very simple, particularly those that have a low number of shares available to trade. We call that the float. So this is an example of one of those stocks. This is BLMZ, a stock that caught my attention in the pre-market on Friday. You can see here in the pre-market session, it was quite active, and also in the after-hour session on Thursday, it was quite active. So that's why I had it on my screen. In the first few minutes of the day on Friday, when the market wasn't looking all that great, this stock gave a buy signal. That happened right here at 9:33 Eastern Time. Entry point at the white line at $1.50. Support at about $1.35. And the stock had a nice move to the upside. Now you'll notice I have all of these green lines on the chart. Those are what I call reward for risk lines. So this is the risk of the trade. And then this is a reward of 1, reward of 2 times risk, 3 times risk, 4 times, and so on. This stock broke its upward trend line right here from a falling top. So remember at the top of the video, I talked about how upward trends typically break when the upward trend line is broken from a falling top. You can see it here in a day trade on a 1-minute chart as well. This is a very reliable pattern, something you want to always look for. When you have a strong stock and you're wondering when to sell, look for that break of an upward trend line from a falling top, as it happened in this stock right here. Now, before I go, I'll just go back to the Stockscores website. Just want to remind everyone that we have a free weekly newsletter that is available every week. You just go to the website, you register, you just click in here on login and sign up. And it's a free weekly newsletter. I send it out, trade tactics, stock picks, free for you, and also you'll get updated on any upcoming events that we have. So I hope that you can register for that as well. Subscribe to the channel. Make sure that you hit the like button if you enjoyed this video. Most importantly, trade well.